Hey everybody, I'm Joy Bailey. I'm the mortgage boss, and today I wanted to talk about why you need extra money at the end of the transaction sometimes. So at the time that I'm recording this, I'm hoping that I put it out in the right order, that the previous conversation would have been about needing money to buy a house. So I was saying that you can't buy a house with like bad credit and no money. So kind of continuing along with that just a little bit. Sometimes in the transaction, you need to have money left over that is above and beyond the expense of the down payment and the closing costs. And what that is called is reserves. So reserves are equivalent to one full payment on the mortgage. So, for example, if we run everything through the automated underwriting system and it says that, yes, this person can move forward, but they need 3 months of reserves. If the projected mortgage payment is $1,000, then you'll need $1,000 for 1 month, $1,000 for 2 months, $1,000 for 3 months. So you need a total of $3,000 to meet the reserves requirement to be able to get that loan. Well, who needs reserves and why? So it could be different reasons. So the very first reason I want to talk about is bad credit. So to offset something negative and to make the bank or the lender feel good and warm and fuzzy on the inside, they're like, they'll be like, well, let's add some additional money in there as a cushion just to make sure that the person, in case they hit rough times, will still be able to continue to make the mortgage payment. That sounds completely reasonable, right? I mean, at least it sounds fairly reasonable to me. So again, it's to offset the negative aspects of the loan application. If you have bad credit, you may need extra money in the bank left over. It might not be 3 months. It might be 2. It might be 1. It can completely fluctuate depending on your credit profile and the way that the system is reading your particular application. So that's one reason why you would need it. So another reason why would be for people that are not first-time home buyers, but you may be leaving your current home that you own to buy a new home, but you want to keep your old home. So let's say you turn into an investment property. You're going to need to have additional monthly mortgage payments in the bank to offset time that we anticipate might be needed to transition the property from one tenant to another tenant. So again, it's designed to make sure that you're not overextending yourself and you don't have anything. We want to make sure that all your obligations can be met if you find yourself in a tight situation. So the only way that they would feel comfortable is if you can show a couple months of mortgage payments for, the house that you're leaving while you're trying to find a tenant. If you've already found a tenant, don't matter. We still want that extra money in there. So there's not a way to get around it. A lot of times people are like trying to figure out ways to get around the rules. I said what I said. It's the rules, the rules, the rules, the rules. Like, I'm not making the rules up. These are guidelines that come from Fannie and Freddie. They're not anything that the individual lender is making up. So reserves are monthly mortgage payments. So your principal and interest, property tax, homeowners insurance, mortgage insurance, and any HOA dues for that month. So those 5 things. So if for whatever reason, like let's just pretend that you are going into a house, credit's a little shaky, and let's say you're getting a house, and let's say that the payment of the house is $2,500 a month. Well, if you have shaky credit and the findings say that you need reserves, you may need down payment, closing costs, plus another, let's call it 3 months. So let's say, was that 25 times 3, $7,500 in reserve somewhere, potentially. That is a little bit of an extreme example, but I want you to grasp my point. Don't have just enough to get into the house. Have a little bit more socked away in case you do need reserves. This is, again, particularly for people that are entering into the market with low credit. Be more prepared than you need to be. So then that way, if things start to take a turn, you have some extra money there to, make up whatever it needs for you to make up. So, reserve requirements, 2 reasons. 1, you're entering into the transaction with bad credit, and the findings may ask for you to have a little bit of extra money left over. My recommendation would be, 2 to 3 months of whatever that mortgage payment is going to be. That's I am making that up as a rule. It might require that, it might not, but I would rather you understand that that could be there versus being surprised by it after you felt like, you saved up everything. And the second reason is if you are leaving your current home and you're going to turn it into an investment property, we want to make sure that that investment property or the home that you're leaving is going to have a couple of months of mortgage payments still in the bank after you have closed out your transaction. So you would have had money for your down payment, your closing costs, and 2 months of mortgage payments left over. So in that example, pretend that you're leaving the house, your mortgage payment is $1,000 a month, you upgrade and you go and get you this new house that's $2,500 a month. That old house that you want to turn into an investment property, you're gonna need to show a couple of months of mortgage payments left over in the bank after you have paid for everything to go into the transaction for the new house. So I hope we understand now part of why I'm like, don't barely qualify. Like, you gotta have money. It's required. Please, please, please try to go into a situation overly prepared so that you don't have disappointment. That's really honestly the focus of why I try to record these conversations, because I want to make you aware of potential pitfalls that, like I said, we don't ever talk about it. I mean, we never talk about reserves. We only talk about the down payment. We rarely talk about closing costs. But even above and beyond the down payment and the closing costs, you might need reserves. Oh, one other thing real quick. Even if you have down payment assistance, you still might need to have some reserves. So I'm telling you, just always try to have more money than you actually need. I would honestly say 2 to 3 months of extra payments should take care of you. I'm not saying it is always required, but I'm just making a recommendation to try to have a little bit more than what you need. It's always going to be on a case-by-case basis. As long as we're not talking about that investment property situation. You're going to always need reserves if you have an investment property. But like I was saying, if you are going into the transaction, just try to save up a little bit more than what you need beyond the down payment and the closing costs. Even if you're getting down payment assistance, you will probably have a more favorable outcome if you can show that you have a little bit more than what's required for that transaction. Hope y'all have a good day. Thanks.